Let's get back to the one country that has not, except in passing by Patrick, been raised is Russia. Is there some reason everybody else here is avoiding that? Because it seems to me that this is, if you're going to do an oil play, for instance, that's an extraordinary way of playing the oil market, for instance. What's wrong with Russia, or what's right with it?
I think it's still a corruption problem is the biggest.
I think it's governance. Yeah.
Yeah.
Okay, fair enough. That's
And
it.
if you want to be exposed to oil, you can go to Indonesia or others, or Middle East even. So.
And Mexico.
And Mexico.
Brazil.
Brazil. Right? All right, so let's look at some of the other European markets and compared with Western European versus East European versus some of the other regions, because this is one of the areas that's interesting. One of the questions it was suggested that we might want to raise is the bank stress tests in Europe. But what I'm interested in is, first of all, A, were they stringent enough, and B, what's happening to stress tests in other parts of the world? Are we not concerned about the banking systems in some of the emerging markets as well? Anybody want to take that on?
Well, regarding stress tests in Europe, I think you got what you wanted. It really depends on what's your goal. I mean, the goal on the stress tests in the US were to find out how much money you had to pump into the banks and to rescue them. In Europe, stress tests were done after the banks were rescued. So it was simply a way to communicate on how their capital base was good enough to winter other problems. So it's a complete different perspective, and saying, is it stringent enough or not, I think it misses the point. The point is really, what is it done for? And again, I think that the purpose in Europe was not, in fact, to inject money in ailing banks, but it was simply to communicate to the marketplace that the banking system in Europe was still okay compared to the US banking system. And that's what you got. Now, does it mean that the banking system worldwide is healthy? I think it's still levered. It still have to delever, and it will go through a hard time of additional regulation.
What about some of the other regions of the world that have not had formal stress tests? Heidi mentioned Turkey, for instance, but some of even in Asia, the Chinese banks have never really had a stress test in that respect, right? Are we concerned about that? Indian banks?
I'll make a very quick point here, which is I think that the stress testing of banks is a very, very contentious issue politically, and that the idea that any country would give you an honest appraisal if they had a weak or deficient banking system is, I'm not saying you're being a Pollyanna, it's Pollyanna-ish to expect that they're going to do that. Europe and the United States still struggle between who has the better banks, who, we jab at each other about it, and it's very political. And in China, I very, very much doubt that they're going to want to open the books. In India, they're certainly not going to want to, because it would be considered a point of national embarrassment if there was something desperately wrong. So you have to sort of dig around and find out yourself, I guess, I'm afraid.
But it was a start, though, for creating eventually some sort of standards for gaining, I guess, investor trust back into the marketplace, which I think is sort of a key ingredient going forward.
I mean, does BIS help at all in any of these places? I mean, what they look for when they come in there? I mean, can you rely on any international institutions to do this kind of monitoring?
Well, you can't even compare today U.S. banks and European banks. Okay, because Tier 1 capital doesn't mean the same thing, and that the accounting standards are not the same. You've got GAAP on the one side and IFRS on the others. So that might one day come to a standard, but it's not the case. I mean, some banks did the exercise of publishing what would be their Tier 1 capital ratio in the two accounting standards, and you come to different figures. So what's the best? I don't know.
I would also say, and I don't mean to monopolize any time here, but I would also say that in the case of European banks, and certainly banks, China and India, there's a tremendously close relationship between the government and companies and the banking system. So they own tremendous amounts of stock in some of the local companies. The governments, I mean, you would initially, Nicholas, when you started, you had said that one of the things you look for is a stable banking system in a country. So again, it's a compounding issue that you can't get around the fact that anyone who came out and said our banking system is terrible is immediately going to drop in the eyes of foreign investors. And especially in emerging and frontier markets, they're desperately hungry for the money from foreign investors because the infrastructure tends to be, certainly in India's case, the infrastructure is substandard for what they're trying to achieve.
If I could just represent Latin America, Latin America still has a terrible reputation from debt crises, but the banking systems in Latin America are actually very strong. I think, Tier 1 capital in Brazil, I think averages, I think it's around 9% right now. I mean, the capital ratios are very high, with just one quibble, which is Banco do Brasil, which is a state-owned bank, and Nicholas alluded to different standards for what can be included as Tier 1 capital. The government-owned bank includes some hybrid securities that wouldn't be considered Tier 1 capital, but still overall their levels are more than adequate. And Mexico has basically all of their large banks in foreign hands. They were all bought out by foreigners after the Asian crisis. They made it through the peso crisis, but they all got, sold to foreign banks, at the end of the 90s and the beginning of this past decade. So they're in safe hands. But the problem was during the downturn, all those foreign banks just, tightened up the purse strings, and credit really came to an absolute halt during the crisis because the foreign, parent companies did not want exposure in Mexico. So last year, Mexico really suffered. Its GDP contracted by 6.5%. It's also a problem for Mexico that they've hitched their wagon almost exclusively to the U.S. engine. And with the downturn in our economy, with our auto industry, our construction industry, that's really hurt exports from Mexico, and it's hurt remittances back to Mexico. But overall, still their banking system is very sound. And Chile also has a sound banking system.
Before I open it up, I'm sure there are many questions from a very distinguished audience here. The only company I've actually heard mentioned is one company from India in all our discussions so far. Does anybody else have any other interesting companies we should be watching, or that you would love to put some money in, or perhaps have recently and would love to talk up? This is your chance to talk up your portfolio. Nicholas, you want to start?
Well, again, in emerging markets and mostly in Asia, if you look at the depth of the market, you will find out very quickly that 80 to 90% of the issuers are still state-related and banking institutions. So you can talk about investing in corporates, but in most of these markets you will have to struggle with 20 to 30 names that have standards good enough in terms of reporting and transparency in which you can invest. So I think the best way to address that, and it's because it's probably the only way today, is to look at investing across a region, because it's going to be, at least in Asia, difficult to invest in a single market alone, and look at the number of sectors where you feel that because of exports or because of I was looking at, again, an Indonesian company the other day, and what was quite interesting is that they're building cycles.
Which one?
I don't remember the name because it's too complicated to me. But they're building cycles. And with a 240 million population still not, in fact, buying into cars mostly, you want to be in a company that is buying and selling cycles and motorcycles. So that's a good bet. But now, the issue in itself, $40 million. Do you want to invest money? How much? And how much exposure do you want to give to your clients to that? So you need to be really blending a number of the issues, whether it's state-guaranteed, banking, and corporates, and move along the market that is becoming deeper.
Josh, any thoughts?
Sure. Just, where I work, we allocate to hedge funds and private equity, and so no specific companies to suggest, but we continue to actually choose the avenue of incorporating private equity as the best approach to emerging markets, not only does it certainly struggle with execution like we've all talked about now, but it does have sort of, in our minds, an extra layer of corporate governance and sort of an information edge as well. So that continues to be the way that we approach emerging markets.
It happens that I wrote a piece for Forbes Asia some months ago on a private equity investor, American private equity investor, who'd gone to Bhutan and begun a hazelnut venture, which he expects to do extraordinarily well there. He has an amazing model, the first one into this market. But anyway, an aside.
For Latin America overall, I think the most exciting opportunity right now is Brazil. And I don't want to give a specific stock pick, but I want to follow up on a comment that one of the other panelists made, which was with respect to demographics. I mean, the emerging market world is overall sort of a young world. And Brazil right now in particular is in the demographic sweet spot where the majority of the population is in the prime years of life. They're working age. And they are at their peak of production and consumption, which is, like the baby boom generation in Brazil, basically. And in Brazil, they have a housing unit deficit of about 7 million homes that have to be built, and they're building, at a rate of maybe 500,000 or 600,000 a year. That needs to pick up. That's going to grow. What all goes into houses? What do you need to put into a house? I mean, that is going to be a huge boom. Consumption, construction, all of the spending. As has also been mentioned, a lot of the stocks are pardon me, on the small side, or else they don't have ADRs. So you would need to invest in them via a fund. But we think basically the domestic market stories for the longer term are the really attractive, exciting ones, and they may not be so accessible directly on an individual stock basis for foreign investors. So I would say pick a good fund.
Patrick?
I think the most exciting opportunity in India and probably quite a few other markets, I only speak to India because I know it a bit better, the privatization, the upgrading, the expansion and the modernization of the ports in the country is something that has to happen relatively expeditiously. It's going to be an enormously valuable resource for them as the country grows and they start to demand imports. It's a fuel-starved country. It has terrible roads. The cheapest way to ship things is still over water. And they have an inadequate and, I would say, at best, sort of arcane port system there. And that's something that's going to change very dramatically. And it also has the scale to be monetizable for a large foreign investor because it's going to be billions and billions of dollars that go into it. So, that would be a thought on my front.
Yeah, to me, one of the best way and easiest way, in fact, to get exposed to emerging markets and their growth is the currency market. I mean, it's a good proxy. I mean, if you don't want to, or you can't invest directly in bonds or in stocks in different markets, well, look at the currency market and local currency funds. Now, you need to check also what's the liquidity of these markets and whether you've got actual real forex market or NDF markets. But it's a good proxy and a good way, in fact, to get exposed to the growth of the region.